Hello from Dubai and a warm welcome to Money Majlis Season 2. I'm Shubho Sarkar and I'm proud to bring you the second season of my award-winning podcast, Money Majlis. Money Majlis, as you know, is a podcast on all things money. Every 2 weeks, I bring you an honest, insightful and interesting conversation on banking, finance, technology or marketing. And these conversations are with the movers, shakers and leaders of the industry from the Middle East and from across the world. My purpose is to deep dive into topics that are current and consequential for the banking and finance community. In the first season, I brought you 28 such conversations with 29 industry leaders. Leaders such as Arvind Krishna, Brett King, Piyush Gupta, Vijay Shekhar Sharma, Ahmed Al-Naqvi, and Raja Rajamannar. While 24 of these topics centered around money and banking, the 4 extra episodes featured other topics like food, culture, books, and gender parity. In Season 2 starting today, I hope to bring you more such exciting conversations with very interesting guests. But more importantly, Season 2 will have a higher purpose. Yes, a higher purpose. All profits from Season 2 will go into worthwhile causes from across the world. Every episode will give you, the listener, a Money Majlis gift card to redeem and a choice of causes to redeem for. At the end of every episode, you will go into my website give.moneymajlis.com and choose the cause you want to donate to. Once you make the choice, you will pledge your free Money Majlis gift card to this cause. Isn't that cool? Money Majlis is the only podcast in the world where all profits, yes, all profits, go into various causes from across the world. And the coolest thing is that each guest on the show and every listener on the show gets to choose where the money goes. All the more reason for you to share this podcast with friends, family and colleagues. Yes, together we are starting today the Money Majlis movement for good. And my partners in this journey are my generous sponsors, my wonderful listeners, and drumroll please, Good World, the social impact startup based in Washington, D.C., USA. Good World is powering the Money Majlis gift card and the entire technology stack to make the donations possible. So thank you, Good World, for your good work. To kick off Season 2 today, I have a legendary guest. A guest who's known as the Indiana Jones of emerging markets and even has a comic book featuring his life story. Yes, today we'll be talking to the famous fund manager, Mark Mobius. Mark Mobius is 88 years young and now works and lives in Dubai. I first met Mark 25 years back when he was with Franklin Templeton. I got an opportunity recently to catch up with him in his office in MR Square in downtown Dubai. But before I start with Mark Mobius, here's an acknowledgement of my sponsors.
Money Majlis is proudly supported by Aquanow, the premier crypto-as-a-service provider, now building in partnership with the top financial institutions in the Middle East. Discover more at aquanow.com.
The end touches your life.
In more ways than you can imagine.
You want more tech,
More speed.
more convenience,
more entertainment.
more business solutions,
EAN gives you all that.
and so much more. And go for more.
Money Majlis is brought to you by Intellect Design Arena, driving digital transformation in banking and insurance.
Money Majlis is brought to you by Live Digital Bank, powered by Emirates NBD. Trust and innovation combined.
This podcast is proudly brought to you by MasterCard.
Money Majlis is brought to you by Network International, the leading digital payments technology company in the Middle East and Africa.
It is not every day that you meet a legend. Today is one such day when I'm in front of a rock star of the asset management industry. Yes, I am with Mark Mobius, who has been dubbed, among other things, the Indiana Jones of emerging markets investing. He is an institution who is looked up to by hundreds and maybe thousands of fund managers globally. Mark Mobius, welcome to Money Majlis, the podcast that talks about all things money. How are you doing, Mark?
Thank you. Very good. I'm feeling very good, and I appreciate that nice introduction.
Mark, before I begin my questions, please allow me to introduce you to my listeners, to our common listeners. You were born Joseph Bernard Mark Mobius to German and Puerto Rican parents in Hempstead, New York. You earned your BA and MS in communications from Boston University and received a PhD in economics from MIT in 1964. You also studied at the University of Wisconsin, University of New Mexico, and the Kyoto University in Japan. Your extensive career included working at a talent agency, teaching communications and marketing Snoopy merchandise in Asia. You worked as a political consultant, a market researcher, and ran your own research business that branched out into securities analysis. Later, you became the president of Mega International Investment Trust Company in Taipei, the first and biggest investment company in Taiwan. And then things changed. In 1987, the renowned value investor Sir John Templeton asked you to run Templeton Emerging Markets, one of the first emerging markets funds in the world. The rest, as they say, is history. You stayed with Franklin Templeton Investments for over 30 years, and in your 3 decades at Templeton, you developed knowledge and expertise that served as the basis for perceptive insights, some of which include correctly calling the 2009 bull market and investing in Africa ahead of others. From initially investing $100 million in only 6 markets, you grew to over $40 billion. Yes, $40 billion in 70 countries. In 2018, you founded Mobius Capital Partners to focus on a concentrated strategy centered around improving governance standards in emerging market companies. Today, you trot the world to discover undervalued companies before others do and are a key figure in developing international policy for emerging markets. You have won numerous industry awards. I won't list all of them, but most recently, the Lifetime Achievement Award in Asset Management by Global Investor Magazine, 50 Most Influential People by Bloomberg Markets Magazine. You authored several books. In fact, I'm sitting in a room full of your books, including Invest for Good and the Little Book of Emerging Markets in 2012. You've even been featured in the comic book Mark Mobius, an illustrated biography, and thank you, Mark, for giving me a copy of the book. Today I'm going to read that tonight. So in short, Mark, you're a legend in asset management, a comic book star, a rock star of emerging markets, and what my daughter calls a GOAT. And I'm grateful for your time today at Money Majlis. So let me start. You started the first ever emerging markets equity fund in 1987 with Franklin Templeton. And just to give a bit of perspective to our listeners, the MSCI Emerging Markets Index was only created 14 years later. So you are way ahead of that trend. You know the asset management industry from its infancy. Back then, there was no benchmark, no sell-side coverage, no internet, not even quarterly reports. In fact, there were dozens of different accounting standards. Knowledge, information, and analysis made a huge difference, so your fund could charge high management fees and still deliver great net returns to investors. Now fast forward to today, a few realities. One, management fees have halved at best, but returns are tepid in general. 2, ETFs have taken the lion's share, and every single information is available instantly across the planet. And 3, 5 US companies are pretty much the same value as the entire Eurozone markets, which means there may be little room for stock selection. So Mark, a big question to start with. Do you think that the asset management industry is a dinosaur and will disappear? In the same way that bookstores or travel agencies have disappeared, do you think it is the beginning of the end of the asset management industry?
I think the asset management industry is surviving and will do very well going forward for one very simple reason. People need guidance. They need help in investing their money. Most people around the world don't want to be concerned with how to invest their money. They're more interested in enjoying their life with their family or working at whatever job they're working on, working at their hobby, etc., etc. So the vast majority of people need help. They want help. And they are not so concerned about what the market's going to do today or tomorrow. Of course, there are many people who are doing that, but most people do need help. So the asset management industry is alive and well and will continue to function. Now, of course, things have changed dramatically. When we started in 1987, we raised $100 million on the New York Stock Exchange. This was the first listed emerging markets fund, the Templeton Emerging Markets Fund. And, I received this money, and the first thing I thought, well, okay, where am I going to invest this? Because if you looked around the world, first of all, communist China, forget that. Communist Russia, forget that. Eastern Europe, forget, they're under the so-called Iron Curtain. Most countries in Latin America were either dictatorships or socialist, which did not welcome, in fact, avoided and prohibited foreign investment. So it was really a challenge where to put this money. And we started in Hong Kong. Of course, Hong Kong was open. Philippines was there. Malaysia, Singapore were there because, they were the remnant of the British Empire and had markets, stock markets. And then Mexico. And that was it. 5 countries where to invest. The other challenge, of course, was at that time, John Templeton was based in Nassau, Bahamas, and he had 2 offices in the U.S., an office in Fort Lauderdale and one in St. Petersburg, Florida, one for distribution, the other one for the investments for big institutions. But the idea of opening an office outside, again, was a big challenge as well. But I said, look, Mr. Templeton, we need to have an office in emerging countries, and let's open in Hong Kong. So I went back to Hong Kong. I had lived in Hong Kong before moving to Taiwan, and hired 2 Chinese analysts. Now, when I left Templeton 30 years later, those analysts were still with me, which was a great tribute to them. And of course, I enjoyed their development over those years. And then we began to start opening markets. And the big challenge, by the way, was to get a custodial bank to open some relationship in these countries. Because if you went to Citibank or Bank of America or State Street and so forth, and you asked them, look, I want to buy shares in Brazil, or they said, oh no, that's too dangerous. I'm not going to be responsible for holding shares in this country or that country. So luckily, Franklin Templeton, or it became Franklin Templeton after 1993 when Franklin Resources purchased Templeton. But luckily, we were so big, the Templeton organization was big enough to pressure the banks to open custodial relationships. So we started that very difficult work to, open these markets. Now, the good news, of course, in 1987, we were at the beginning of we had gone through a bear market in America, and we were beginning another bull market. So we were buying at the right time, let's put it that way. So the investments we made in the first 5 countries did very well, and then gradually we were open other countries, and we eventually opened offices in Korea, in Vietnam, in Thailand, in Malaysia, Singapore, India, of course. We were in Shanghai as well. In India, we were in Mumbai. Then in South Africa, in Brazil, in Argentina. And eventually, when Russia opened, we opened up in Russia, in Poland. So we had a real success in developing new relationships around the world. And eventually, I had 80 analysts.
Wow, from 2
under
to 80.
my wing, yes. So it was really an adventure. And of course, we treated this group as the emerging markets team. And every 6 months, we would have a meeting in some emerging market around the world. So these gentlemen had a great experience to see what was happening in other parts of the world where they were not living. And even to this day, we continue an alumni relationship. We have a WhatsApp group
Amazing.
that we continue to communicate and get together. So it's been an incredible adventure. Of course, once emerging markets began to open, then you had other players come in. And within 15 years or so, you had many, many other emerging market funds being opened.
Correct.
And today you can still see many markets opened. But things have changed dramatically because you had exchange-traded funds, ETFs.
Yeah.
And that has been probably the biggest revolution in investing since the beginning of stock exchanges. Because that gives an opportunity for people to invest in a multitude of ideas, a multitude of companies, regardless of what their interest is. You can go almost anywhere. Now, of course, that meant pressure on fees, as you mentioned.
Correct.
We were, in the beginning, our fees at Templeton were 125 basis points, 1.25%, plus, you must always remember this, there's a plus, transfer agency fees, this fee, that fee. So eventually, clients would be paying 2.5%.
Correct.
Now, of course, with ETFs, that fees have come down quite a lot. But interesting to note, if you look at ETFs, you'll find that many of them are charging 1% and even higher than that.
Yeah.
So it's not only about fees, it's about convenience and ability to get involved.
So that brings me to my next question, Mark, connected to this. What are your views about active investing versus passive investing from an investor perspective? How should they choose between these two?
Now, if you look at the record, and this has been pointed out by so many people, if you invest in the top 20 stocks, let's say, in any market, the U.S. market is really the best example, but that would be true in India as well, and just sit on them, you'll probably do well. You probably have a pretty good return, maybe 10, 15% over 10, 15, 20 years. And, the so-called efficient market theory, for which two gentlemen won the Nobel Prize, basically said, look, an intelligent, regardless how intelligent an investor is, he's not going to do better than the market because the market knows everything. All the information is already in the market. But of course, that has been proven wrong many times. There are many active investors who have beaten the market. So you can't say that this sort of passive investing is always the best. It's one way of investing, but you really have to look at the other alternatives. Active investing can often, not always, but can often do better.
Okay, so since we're comparing active versus passive, let me ask you about the other comparison that people do always. Public markets versus private markets. We're seeing a lot more assets move to private markets. In fact, recently we saw BlackRock, the largest asset manager in the world, getting into private asset sphere, right? They bought a global leader of infrastructure, GIP. They recently announced acquisition of a major private credit player, HPS. So we are seeing a behemoth in passive management, or like BlackRock, getting into private markets. What is your view of private markets versus public markets?
You need both. The private markets act as a feeder to the public markets. At Franklin Templeton, we also had private equity funds.
Okay.
The advantage of private equity funds is that you can make an investment and work with the management for 5 years, 6 years, 7 years, provided, and this is very important, provided that the investors are patient enough to wait that long. Some of them are not. Some of them want a liquid opportunity in a regular mutual fund where they can come in and out at any time. But the beauty of that private equity is you can work with these companies over a period which enables them to become larger and more successful. Generally speaking, in the private equity area, I would say the success ratio is maybe 1 out of 10. In other words, if you made 10 investments, there'll be one that will really do so well that it will pay for all the losses of all the others, or let's say most of the investments would not necessarily make a loss, but not really return very much.
Yeah.
So with private equity, you need some degree of size, but you need the patience to wait not 5 years, not 6 years, but usually it's now something like 8 years is required. The great thing about the private equity market is that it feeds into the public market, because once you want to get out of a private equity investment, you can either sell the company to someone else or list it. The listing on the stock market is a very nice way to exit.
Yeah.
So the public markets benefit from the private equity.
Yeah.
So you need both. And for the investor, if you're willing to wait, it's probably a good idea diversifying into a private equity fund, maybe 5 or 10% of your capital.
Okay. Now that's a transition, Mark, to another question. In your illustrious career, you have known a very large asset manager like Franklin Templeton with an army of analysts, you said 80, direct access to companies, huge industry expertise, and great support functions. You've also known a much smaller boutique with less constraints and more nimbleness. In your opinion, Mark, what is better for investors, size or speed?
I like speed.
Okay.
Because with speed you can do more, see more. And the great thing about AI, which I don't call AI artificial intelligence, because there's nothing artificial about it and there's nothing intelligent about it. It's really, I call it accelerated information, AI accelerated information.
Interesting.
With AI, you have the incredible speed of information flow and information analysis. And that, I think, is more important at this stage of the game. And now with AI, you can really do a lot more.
So you believe speed is more important, and now you run a much smaller boutique company, Mark Mobius Capital Partners, out of Dubai, which is doing things at great speed, I presume.
That's right, exactly. By the way, the new company is called Mobius Investments.
Mobius Investments,
Yeah.
okay.
But the great thing about what's happening today is, although you have the speed and the information flow, which is so much faster than ever before, you also have the ability, if you're not too large and not too pressured by the market, to take your time, to be more discerning in where you invest, which is why I believe that you really should not have more than, I'd say, 20 investments.
Okay.
Because that gives you, you need diversification, but you mustn't go too far. You must be more concentrated.
Have more convictions in what you invest in.
Exactly.
Got it. Mark, let's now talk about sustainability. We have seen for 20 years the very strong rise of ESG, which is about incorporating criteria of environment, society, and governance in portfolio management, and not just financial considerations. I would say it has risen to a point where it has also become controversial. We have seen the rise of greenwashing and hypocrisy on one hand, and some asset managers have been sued and convicted for that. On the other, some institutional investors have criticized or even rejected this approach, with the famous example of the Texas anti-ESG law. You have developed an extremely interesting approach, Mark, where you combine ESG with the C of culture, what you call the C of culture. Tell us a bit more about it. What do you think about ESG in general, and how is it part of your investment process?
Well, I wrote a book called Invest for Good, and
Yes.
we talked about the ESG aspects of investing. And my approach is I look at ESG as a risk control system. If a company has a problem with the environment, in other words, they're polluting the environment or doing something that harms the environment, that's a risk to the company and the risk to the investor. On the S side, if they're having a social problem in the community, that's a risk. And governance, of course, is most important of all. If you're having a board of directors who are not paying attention to what the company is doing and governing the company well, you have a risk. It's a problem. Or if you are having a management which is not really on top of what's happening in the company, you have a risk. So whenever we talk about ESG, it's about risk control. Of course, the ultimate result is something good happening for the community, but that's not the original objective. That's the byproduct of what we're looking at, what we're doing.
So you're saying ESG should be a normal part of fund management selection?
Exactly. It's a critical part of and basically we've been doing that since the very beginning, but without knowing it. We were not conscious of it, but now we're much more systematic in the way we look at it and in the way we analyze companies.
And how do you define the C of culture? Is that, you're saying culture itself is an ESG in a company?
That's the final component. That's
Okay.
why I call ESG C plus C, because culture refers to the internal culture of the company. Now, under the S rubric, we talk about the social aspects and so forth, which tinges on the internal situation in the company, but the culture of the company refers more to the overall ethics and the overall mindset in the company. In other words, we like to see companies where the management and the staff are all thinking in the same direction and are in concert with each other. Have an idea that they're moving in the same direction. That's very, very important.
So how do you assess culture from outside the company, Mark? Is that difficult to do?
Well, no, actually, because if you look at really successful companies, you'll find that they have a good culture within the company, but that radiates out into the community, into their customer base, into their suppliers, all the rest of it. Very, very critical for the success of a company.
This is a good time now to take a commercial break. Here is a message from my sponsors.
Money Majlis is proudly supported by Now, the premier crypto-as-a-service provider, now building in partnership with the top financial institutions in the Middle East. Discover more at aquanow.com.
The end
Touches your life.
In more ways than you can imagine.
You want more tech,
More speed.
more convenience,
More entertainment.
more business solutions,
EAN gives you all that.
and so much more. And go for more.
Money Majlis is brought to you by Intellect Design Arena. Leverage the celebrated EMAC.ai platform for banking and insurance.
Money Majlis is brought to you by Live Digital Bank, powered by Emirates NBD. Trust and innovation combined.
This podcast is proudly brought to you by MasterCard.
Money Majlis is brought to you by Network International, the leading digital payments technology company in the Middle East and Africa.
Now just going back in history, Mark, when you started investing in 1987, Japan was more than 40% of the MSCI World Index, and it seemed like it would never be challenged. Fast forward to today, Japan is down to less than 6%, but the US is almost 75%. In fact, out of the 25 largest companies in this global index, only one is not American, which is Novo Nordisk. Every other of the 24 companies are American. And it seems like it will never be challenged. Do you agree with this? What is the future?
That's a very good observation, and one we should really look at it carefully. Now, what has happened is that the American companies are no longer American. They're global.
Okay.
They're taking advantage of global growth, particularly emerging markets growth.
Yeah.
if you look at the big companies, IBM or
Microsoft.
Google or Microsoft or any of these companies, you will
NVIDIA.
find that global operations are just as important as the domestic operations.
Correct.
And I'm not talking only about their sales, but also their supply. In other
Right.
words, they're purchasing
Correct.
from all over the world. So one of the reasons why our new fund is not called the Emerging Markets Fund, but I call it the Emerging Opportunities Fund, because I want to be able to buy U.S. companies that are really emerging market companies at the end of the day. And of course, this is going to become more and more critical as India grows. Of course, we've seen the growth in China, but India will become a very, very important market, and not only as a supplier, but also as a buyer for these large multinational companies.
So you're saying these are not necessarily American companies just because they're based in the US, they're global companies.
Exactly.
Now, tell us a bit more about your fund, Mark. You talked just about, now about the Emerging Opportunities Fund. Just tell us a bit more about it.
Yes, what we're doing is, as I said, looking at the global market. In other words, we're not saying, let's just go to the emerging market stock markets. We're going to go global.
Okay.
And we're going to scan the 60,000 odd companies that are listed around the world and find the very best companies, regardless of where they may be located. The interesting thing is that when we do our scans for the criteria that we focus on, not all of them are U.S. companies. In fact, the U.S. comes out maybe second or third in the list. So we're finding incredible opportunities all over the world. And our focus is going to be what we call a quantamental approach. In other words, we want to use fundamentals, but we also want to use quantitative measures to analyze and to do the research. So we combine, the old style of fundamental research with the new quantamental system, the quant system. And that's what we're doing with this new fund. Because the new fund will be very concentrated, probably no more than 20 holdings, and will be global in their scope.
And is this a long-only fund, Mark?
Long only, yes. Now, of course, you got to be careful because sometimes long only means you don't hold the stock for more than 2 weeks if things change. You have to be ready to move if the conditions change. But generally speaking, yes. Once we invest in a company, we like the company, it's still doing the right thing, we want to hold.
And is this fund now publicly available through?
Not yet. It will be launched the January 1st.
Okay, good. Okay, got it. Since we talk about emerging markets, Mark, I will talk about your recent blog post, which perfectly illustrates your independent thinking. Now, since Mr. Trump was elected, one of the most consensual deductions in the investors community globally has been to be very careful on emerging markets because of tariffs, a strong dollar, you name it. And then Mr. Mark Mobius wrote a blog post saying exactly the opposite. Trump is good for emerging markets, you said. Yes. Can you please explain what you meant, Mark?
Well, first of all, Trump is heading a real revolution in politics. Trump has always said, I'm not a politician.
Yeah.
And he's demonstrating to governments around the world some very, very important things.
Yeah.
First of all, he's saying we've got to reduce the size of governments. We've got to make it more efficient. And it's interesting. He tells a story about in his last administration, he lowered taxes, and he also did as much as he could to reduce the regulatory restrictions that companies faced.
Correct.
And when he talked to businessmen, most of the businessmen said, look, thanks for the tax cut, but that was not the most important thing you did. The most important thing you did was to reduce the bureaucracy. And I think in this new administration he's heading, he will do even more, and that will be a demonstration to countries around the world, because you will see the effect of higher growth in America and a much more prosperous American economy. Now, why is this good for the emerging countries? A richer America means that the Americans need to invest more of their money, not only in America, but globally. They already are huge global investors, but they will even do more. The second thing Trump is doing is he is saying to China, look, we're not going to have the unfair trade practices anymore. He's imposed higher tariffs already. And that has resulted in a dispersion of Chinese manufacturing into other emerging market countries.
Correct.
So Vietnam is, well, all these countries have prospered. Korea, Taiwan, Philippines, Vietnam, Thailand, even Brazil, and of course India is going to be benefiting more and more as we go forward. So indirectly, Trump is really helping emerging countries to develop new manufacturing because the Chinese are having to export their manufacturing so they are not restricted in the U.S. import duties. The other thing I think which will happen is that a more open society in America will mean much more flow of information and goods and services around the world with America. In other words, the American tariffs are not going to restrict trade so much, but will act as a bargaining chip for the Americans to sit down with their trading partners and say, look, this is what we'd like you to help us on. Let's get together. Let's make it fair for both parties. So I think this is going to be quite revolutionary in many ways.
So you believe Mr. Trump is going to be net positive for the emerging markets?
Net positive, definitely. I believe it will be net positive.
Okay, now moving on to a different theme, Mark. You are probably the world's most experienced investor in higher growth, but also high risk countries. You've seen a large number of debt crises spiraling out into catastrophes, recession, financial disasters, currencies collapsing, painful restructuring, and many losses for investors. Now we are seeing debt sustainability is starting to be openly questioned in many markets. I mean, not just Japan, but also in Italy, in France, and the US. We are seeing deficits are piling, the populations are aging, especially in Europe, and it's hard to see a miraculous acceleration of potential growth. Based on your experience, Mark, of multiple cases across Latin America and Asia, what is your playbook when debt sustainability becomes an issue? Are these countries too big to fail or too big to bail?
That's a good way of putting it. It's probably both. But I would say that you have, of course, the macro situation with the country. A country government may be in big debt.
Yeah.
And may have trouble with maintaining their finances, devaluation of currencies and so forth. But then at the other level, there are companies in that society, in that country, that are thriving.
Yeah.
Why are they thriving? Because they're able to manipulate their system of working to get around all these problems. Let me give an example. Turkey. Turkey has had a terrible currency.
Correct.
The currency has been devaluing very rapidly for a number of reasons, mainly because of money printing by the Turkish government.
Yeah.
But we're finding incredible investment bargains in Turkey. Why? Because you have companies that are exporting and earning dollars, but are paying their expenses in Turkish lira, which is devaluing.
Yeah.
So the profit gap is getting wider and wider for these companies.
Correct.
So it's very important not to write off a country that has had these difficulties, because there may be hidden opportunities there. By the way, another, I think, beneficial impact of Trump is that he is definitely going to tell countries no more money from America unless you get your own house in order. And that will be a very important lesson, a very important aspect of reform globally.
You mean IMF and World Bank will tighten their purse strings?
Exactly. I think he will be saying, look, let's not be handing out money anymore to these countries that are not paying back and not managing their finances properly. So this is, again, a very good impact that you'll see with the new administration.
Now, Mark, let's talk about currencies for a minute. The dollar and the BRICS story, right? The US population is around 4% of the world. Its GDP is roughly 25%, a quarter of the global economy in nominal terms, probably closer to 10% in purchasing power parity. But still, as we know, almost 80% of international trade happens in US dollars, and 90% of FX market transactions are in US dollars. Now, BRICS is no longer just a convenient acronym for Goldman Sachs Research. It is now a body of countries which are threatening, as an international alliance, to escape the green hegemony. Question for you, Mark. A, should they have a currency? Should there be BRICS currency? And B, is it conceptually viable?
Well, it'd be wonderful if they could have a new currency, but I'm afraid it's not going to work.
Okay.
Because these countries are at odds with each other. There's no way they can agree. For example, the Chinese will never agree to accept a currency that includes South Africa or Brazil or what other countries, because the history of these, the devaluations of these currencies, individual countries, have been great. It'd be very difficult for these countries to get together. The only way would be to have a new currency based on gold.
Okay.
They fix the price of gold to the currency, that would work. But there's not enough gold, I think, to be able to implement that. You must remember, the reason why the US dollar is so powerful is because it is free. There are no restrictions on the use of the dollar.
Yeah.
If you go to renminbi, there are restrictions on what you can do, or any other currency
Indian
around the
rupee,
world. And that is the key. Now, of course, Trump, by the way, is very interesting. Trump recognizes the risk to the U.S. dollar.
Yeah.
And he's recently threatened
Yeah.
countries and saying, look, if you don't use the dollar, we're not going to do any business with you. And he realizes that the dollar strength or the dollar hegemony is very, very good for the U.S. It's a big benefit to the U.S. But the problem is the U.S. has weaponized the use of the dollar by restricting the use by certain organizations like terrorist organizations, et cetera, et cetera.
The OFAC list, et cetera, yeah.
Exactly. So I believe that he will probably relax some of these restrictions once he comes into the office, because he must realize that if these restrictions continue, the use of the dollar will get weaker and weaker.
Yeah.
And of course, the Bitcoin and cryptocurrencies are now coming up because they are being used to replace dollar payments in many ways.
Correct.
So I think at the end of the day, it's very interesting to see a whole new generation of people accepting cryptocurrencies.
Yeah.
And I think it's not only because of some restrictions on the use of the dollar, but also because they recognize that governments have been printing and printing and devaluing their currencies, including the U.S. dollar.
Yeah.
And they recognize that the Bitcoin is one way to get away from that.
Correct.
So it's going to be interesting to see how this develops.
You talked about crypto there, Mark. My question to you, would you advise the average investor today to hold a percentage of their assets in crypto assets?
No.
No?
It's my personal opinion, and is not based on the sentiment in the market, certainly. I know one of my colleagues, when I first asked him to join us in this organization, this was about 2 years ago, I think it was, and no, 3 years ago, and I said, where do you put your money? And he said, Bitcoin. I said, you better sell it right away. At that time, it was, I think, 2,000.
It just cost 100,000, right?
I said, I don't talk about it anymore.
Yeah.
So, but my feeling is that if you don't fully understand something, or you have some doubts, then you better not invest. And that's the case with crypto. It's not fully understandable. The blockchain process, of course, I know is supposed to be very revolutionary, and it is in some respect. But at the end of the day, there are certain aspects of crypto that are not possible to fully understand. So I would prefer to stick to stocks and gold.
So I take it that your new fund will have no crypto assets.
Well, that remains to be seen, because I have colleagues who are crypto fans, so they may convince me to do something. One of the things I'd be interested in is the miners, the people that mine for crypto, and also the exchanges, the organizations that exchange crypto. It's
like Coinbase, etc.
Exactly. It's like, they said the people that made money in the gold mining were the people that were selling the shovels.
Correct.
And the pails rather than the actual miners.
Yeah. So you could look at those companies as part of your fund. Got it. Now, Mark, let's talk about the two giants of the world population today. Uh, of course, China and India, and the link to the world economy tomorrow. More than 1 out of 4 humans lives either in China or India. And according to Goldman Sachs, in 2025, their economy, which is this year, should be respectively $42 trillion dollars and $22 trillion dollars respectively, the largest and third largest in the world. So China will be the largest. It is centralized. It has proven in the last 30 years that it is extremely effective in long-term planning, and in stock market is doing nothing for years with a price to earnings ratio of barely 10 at times. On the other hand, India is a democracy. It's chaotic. It's full of potential though, with a young population, but its GDP per capita is still below 3,000 US dollars. They still have to prove themselves in a way, and yet their P ratio is almost as high, in fact, higher than US stocks at the moment, more than 20 times, 25 or 26. How do we deal with that?
Well, the PE is a reflection, of course, of price versus earnings. Now, what's happening is that people, when they look at the market in India, are looking forward.
Yeah.
They're looking at where India will be in 5 years. So when they purchase a stock, they're thinking of a lower price earnings ratio because the earnings will be moving much faster than the price. Then that explains the high PE ratio now, but going forward it will be lower. And I think that makes a lot of sense.
Okay.
And don't forget, you've got a country that's now growing, the latest numbers I think are 5-6%. I think it's going to get back to 7-8%. China, of course, has come down in terms of growth. And will continue to go down. Not only because it's a huge economy, very difficult for the growth to be very high, but also because you've got an aging population. The population age in India is something like 25, 26, whereas in China it's 35, 36. So that makes a big difference in terms of growth.
The demographic dividend.
Exactly. But the other very important point is this. You have to ask, why was China so successful? And the reason was not because of communism. The reason was because of private enterprise. When Deng Xiaoping said, I don't care if the cat is black or white as long as it catches the mouse, and to be rich is glorious, these were signals for the great entrepreneurial spirit of the Chinese people to blossom. And that created an incredible economy, incredible growth. It was not because of communist planning. Now, of course, the communists then took advantage of the wealth in taxation to grow an incredible infrastructure. But we always remember that it's not the communist or socialist principles that drove the economy. It was the free enterprise spirit. Now, to the degree that China can revive that, because under Deng Xiaoping, Xi Jinping, that's kind of been discouraged. And they may change their approach. Looks like they're beginning to change their approach. So that's a very critical component. A lot of people say, oh, maybe the Chinese model is a better model than the India model. No, the two models are similar in some ways. The difference is in India you have much more variety and much more creativity because of the situation in the country is so diverse. So you have a lot more opportunity for growth in India.
Got it. Now, Mark, you personify how crucial the human judgment is to building a successful track record in investment. In fact, you have nothing more to prove to anyone. So I have to ask you the most provocative question of this interview. Do you think that AI could be more successful at active portfolio management than humans? Can we expect an AI agent called, let's say, Marmo, I just came up with the name, short for Mark Mobius, Marmo, to create the best EM fund by 2030?
I don't think so. The reason is this. The market is about emotions. I always say it's in my book about investing, I say emotion is the potion.
Okay.
The market is an emotional animal. AI is not an emotional animal. AI can maybe track emotions, but they cannot anticipate emotions. So it'll be, I think, very difficult for AI to beat the human brain in terms of creativity, in terms of thinking of new ideas, thinking of new ways of investing. In the short term, you will find some models, AI models may work, but I think in the long term, it's very unlikely.
Would you like the name Marmo for an AI agent? Is it
I
something,
like that.
yeah, something that you'll probably copyright and sell?
Yes.
Okay, I got that. That's a great answer, Mark. You have written a book recently called The Book of Wealth for youngsters starting out on their investment journey. What prompted you, Mark, to write this book, and what advice do you give to young investors of today, the millennials and the Gen Zs, many of who are amazingly good at what they do work-wise,
Yes.
but not the best in managing their money?
Yes.
What is your advice to them?
That is precisely why I wrote the book, because I've noticed what you noticed is that so many of these young people have no idea of investing, have no idea of savings, and have no idea of how to look to the future for their wealth and their economic well-being.
Yeah.
So that was the main reason why I wrote the book. But in the book, I also underlined the importance of health. In the book, I said, health is wealth. So the first thing you've got to do is make sure you are healthy, because you can have all the wealth in the world, but if you're not healthy, it's not going to do any good. And in order to be wealthy, you've got to be healthy enough to achieve something, to work, to think, and to act. So that is the main message of that book. Of course, there are many other things in the book. I talk about different ways of investing, different types of investing, et cetera, et cetera. But the big message is that.
Okay. I mean, I have the book in my hand right now, The Book of Wealth, Young Investor's Guide to Wealth and Happiness by Mark Mobius. And my advice to all young listeners on this show is go up and pick the book up. It's a Penguin publication and available on Amazon. So I think it's I want to plug the book for you.
Thank you
Mark,
very much.
I think it's a great book, and that is the first copy that I will give to my 25-year-old daughter, who is also starting out in a career in investing. So thank you for that.
Well, thank you.
Now, Mark, moving to a personal question. You have roots in Germany and Puerto Rico. You were born in the USA. You studied in the US and Japan. You've lived in many countries. You've visited, I believe, 112 countries, and still counting. Is true what we call a global citizen. Why have you chosen to live in Dubai now?
That's a very good question, because I was living before Dubai in Singapore, which I enjoyed very much. Before that in Hong Kong. I tend to be in places where there's lots of freedom, a lot of free enterprise kind of atmosphere.
Yeah.
But I found that Dubai has this incredible growth aspect. It's growing by the day. Every day, if you look out the window, you'll see cranes.
Yeah.
New buildings being built. But then more importantly than that, it's a very open society.
Yeah.
They accept all cultures, all religions. There's no discrimination
Absolutely.
at all.
Yeah.
And of course the tax environment is very good here.
Yeah.
There are no personal income taxes. So a combination of all these factors made me come to Dubai. And of course I love hot weather. I love warm weather.
Okay.
So it's ideal here as well.
No, thank you. That's a plug for Dubai as well. So we're plugging multiple things on this episode today. Mark, my final question to you. You've been nicknamed the godfather of emerging markets. In fact, you've inspired an entire generation of fund managers with your little book on emerging markets. Now, after having invested in 5,000 companies, managed funds worth 40 billion US dollars, and having written 12 books and counting, if you were to start out again today, what would you do differently? And therefore, what's your advice to a fund manager beginning his or her career today?
Very good question. I would say that earlier I would have done more travel.
Okay.
You know, I was recently in an interview with someone in Wisconsin, and they said, "What should I do now?" I said, "Get out of Wisconsin, travel."
Good advice.
So I think if I did the different, what I would do differently would be to travel earlier in my life. Although, you know, I had exposure to the German culture with my father,
Yeah.
the Spanish, Puerto Rican culture with my mother, but I had no idea what was happening in Asia. And of course, after graduating from MIT, when I went to Japan, I was shocked. It was a complete culture shock. It was so new to me. I wish I had done that earlier.
Okay.
So I think that would be the thing I would do differently.
Travel more.
Travel
See more of the world.
Exactly.
And in terms of skills, Mark, what would you recommend for youngsters of today? What kind of skills, what kind of courses should they take? What should they learn? Should they learn coding? What should they do differently from what you and I did when we started our careers?
I think you have to be more creative. The young people have to be concentrating more on creativity, whether it's music, whether it's art, whatever it is, because as the machines do more and more of the routine work, it's the humans that will be the creative aspect of what we do, what the machines do. So I would say to people, you have to learn more about creativity, whether it be language, whether it be music, whether it be speaking on the stage, whatever it is. I think that's a very important aspect of life that you have to learn.
Mark Mobius, global citizen, godfather of investing, the Indiana Jones of emerging markets, and a wonderful human being. Thank you very much for your time today. Your insights, Mark, were amazing, and I'm sure our listeners will benefit from all the pearls of wisdom you imparted today in Money Majlis. We wish you continued good health and good cheer and lots of travel, and we look forward to catching up with you very soon again.
Thank you very much.
Money Majlis is proudly supported by AquaNow, the premier crypto-as-a-service provider, now building in partnership with the top financial institutions in the Middle East. Discover more at aquanow.com.
The end touches your life
in more ways than you can imagine.
You want more tech,
More speed.
more convenience,
more entertainment.
more business solutions,
EAN gives you all that.
and so much more. E&. Go for more.
Money Majlis is brought to you by Intellect Design Arena, driving digital adoption in banking and insurance.
Money Majlis is brought to you by Live Digital Bank, powered by Emirates NBD. Trust and innovation combined.
This podcast is proudly brought to you by MasterCard.
Money Majlis is brought to you by Network International, the leading digital payments technology company in the Middle East and Africa.
So that's it for this episode of Money Majlis. Before I finish, I would like to thank my friend and ex-colleague, Maurice Gravier, Chief Investment Officer at Emirates NBD, for the research into this episode. Maurice is a big fan of Mark Mobius, and his insights helped me shape the questions today. Thank you, Maurice. I hope you will enjoy Money Majlis Season 2 even more than you did Season 1. I have an array of marquee leaders, shakers, and movers of the banking and technology world lined up for you in the coming weeks and months. But more importantly, there is now a bigger purpose to this podcast, the purpose of making a positive impact to the world in our small way. Effective today, Money Majlis is becoming a for good podcast. This means all profits from this podcast will go into a number of significant causes across the world. I have taken the liberty of choosing my favorite 6 causes from the thousands of worthy causes out there. The 6 causes I've chosen are the following. Dubai Cares, which has been working towards providing children and young people in developing countries with access to quality education. Red Crescent, which along with Red Cross brings together 16 million volunteers working to save lives, build community resilience, strengthen localization, and promote dignity around the world. World Central Kitchen, which is a non-profit organization that is first to the front lines, providing fresh meals in response to crises across the world. Global Fund for Women, who are the leading funder of gender justice organizations, initiatives, and movements worldwide. The Orangutan Conservancy, which is dedicated to the protection of orangutans in their natural habitat through wild research, capacity building, education, and public awareness programs. And last but not the least, Jaipur Foot, which has provided 2.2 million free limbs and devices to amputees and disabled individuals across 15 countries, making it the world's largest prosthetics provider. More details of each of these charities and the wonderful humanitarian work they're doing are available on my website, give.moneymajlis.com. Every guest on Money Majlis for every episode will be rewarded with a $1,000 gift card that they can choose to redeem for any of the 6 charities I talked about. My guest today, Mark Mobius, has chosen to contribute his $1,000 gift card, compliments of the show's sponsors, to Dubai Cares. As a listener, you can get a gift card too if you act fast. If you are one of the first 50 listeners to log in today to give.moneymajlis.com, you'll be rewarded with a $50 gift card, which you can redeem for any of the 6 pre-selected charities. So please visit give.moneymajlis.com to redeem your free Money Majlis gift card to contribute to a worthy cause. But don't worry, if you don't make it today, you can come back after the next episode to do the same. Every episode of Money Majlis will reward the guest of the show with $1,000 gift card and 50 listeners with a $50 gift card on a first come, first served basis. We are starting a movement of giving today. I hope you like the idea of giving and will share this episode with your family and your friends. From now on, remember, just by listening to every episode of Money Majlis, you can do good to the world. Before I end this episode, I would like to give 3 shout-outs. The first is to my daughter, Ragini Sarkar, who worked with me in redefining the purpose of Money Majlis. Ragini works for Good World, a social impact technology startup in Washington, D.C., and she has helped me to think through the giving aspect of Season 2 of Money Majlis. Thank you, Ragini, for elevating this podcast to a new purpose. The second shout-out is to my sponsors. We now have 6 sponsors of this podcast, and it is with their generous support that we are able to contribute to the causes we have chosen to contribute to. So a big thank you to my sponsors in alphabetical order: Aqua Now, E&, Intellect Design Arena, Live from Emirates NBD, MasterCard, and Network International. Thank you, sponsors, for your very generous support. And the final shout out is to Good World, the social impact startup in USA, who have put together the entire backend technology to enable the giving when you visit give.moneymajlis.com. Thank you, Good World. Please visit the website and see for yourself how it works. Till next time, goodbye and ma salama. Stay well and do good.